Forex market situation update. Good morning, everybody, and welcome back. Today, we're going to talk about the Euro Swiss franc. It's a very interesting case study that we're gonna turn it into an active position right here, right now, live. But before we pull the trigger, let me show you the technical situation. We feel that this is a really special opportunity since the risk to reward ratio is outlandishly favoring the reward, and it kind of makes the whole situation no-brainer, if you know what I mean. Keep in mind this green dotted line right here, 98.96, 0.9896, and this is how it looks like from the weekly perspective. We're basically dialing in on this range that started off around late August, long time ago, few good months ago. We've seen the back and forth exchange. We've seen three of those, three legs, 1, 2, 3, all the way to the top from the bottom, by the way, right? From the last line of support all the way to the last line of resistance. And then there was a dip followed by a few weeks of pricing just kind of drifting downward, drifting sideways and slightly upwards, right? We're talking about 5, 6, maybe even 7 weeks. And we feel like this last 5, 6 weeks when pricing was kind of drifting upwards, it may just be a technical correction to this drop, to the first drop. That's what we're trying to play out on right now. That's what our case, right? That's pretty much our case. So we feel like this technical correction kind of went all the way, completely managed to reach the whole distance of what contains a technical correction. For example, we're talking about the last line of correction, 76.4 Fibonacci correction. That's the last line of correction. So this would be that green dotted line right here. So if price action begins to break that level, that means it's no longer under a technical correction status. That would be more likely a sustained upside move, right? And let me show you why we feel like this may be a technical correction and it just reached the end of it, the end of the road, so to speak. And again, check out that 98, 96 level. Green dotted line represents the last line of correction. Now we're talking about this move right here, from top to bottom. If you apply 76.4, you'll find it right here, right? So it's not surprising to see that pricing was already visiting that, that area, spiking that level not once, not twice, 3 times right here, 4, 5, 6, 7. And even now, even though it did break it a couple of days ago and spent a couple of days above that level, now, yesterday it dropped back below, and now, as you can see, it's fighting back again to push and break that level. And we feel this is a decisive moment right now. This is the money time, and we're gonna pull the trigger. But again, like I said, we may be wrong. Price action may be breaking out, but the whole risk to reward picture is very favorable. Very favorable to the profit, to the reward side, right? Because our stop loss level is probably going to be around 99.75, so we're talking 70 pip, right? But even we got that 98.96 level, so even a break above that level alone will probably send us towards the exit. So we're not going to have to wait those 70 pip to get triggered out. Right, we got a couple of protection levels. 98.96 is one of them, and then another one, 99.40. On the flip side, of course, the reward is 270 pip. Right, you see the difference, right? Risk to reward ratio is really good. So without any further ado, let's pull the trigger. We're going to start very small because we want to make sure we are on the right side of history, if you know what I mean. So we're going to wait and see. We want to see the rejection the pricing is gonna get today from that level, and then if it ends up negatively, then we know, I'm talking about today, right? Then we'll know we're on the right track, and we'll start dropping them bombs and increase the position size significantly. There you go, 5K in, first trade. Let's see how it goes. We'll come back to follow up as we usually do. And that's about that for this video. We're not done yet. We'll see you in the next one. Take care.